Well, let's dive straight in. And my first question is a question we could ask any central bank governor, I think, in the world at the moment, as governments and policymakers grapple with the threat of inflation. The problem in Ghana does seem to be particularly acute. We've had the latest reading in April, nearly 24%. In that environment, it's obviously impossible to have a policy rate that is higher, perhaps, than inflation. So how are you, in this very, very turbulent environment, adapting your decision-making process to this new high inflation reality?
Well, thank you very much, David, for that question. I think that it's an issue which, in a sense, is baffling for all of us. A year ago, inflation in Ghana was near single digits. In particular, we were at 7.5%. And then we find ourselves a year later in high double digits. It's a very complicated environment. As you yourself are aware, we've just come out of COVID. Ghana, fortunately, was able to weather the impact of COVID well without recording a negative growth rate. And it seemed as if the economy had picked up significantly by the end of 2021 with a positive growth rate of about 5.4%. So at the central bank, we had anticipated this. In November last year, we raised the policy rate by 100 basis points. And then we were rather surprised by the inflation rate, which came out later on after that, in February in particular, which triggered the 250 basis points adjustment in the policy rate. This week, the MPC will be meeting. I do not want to preempt what the committee will decide, but I think it's a very complicated situation. As you said, inflation is about nearly at 24%, and we need to take a position on what to do with the current policy rate at 17%.
The spread for US bond yields, Ghana's spread has shot up again, and obviously that's something that people are looking at closely. External debt's going to be more costly, and prolonging the lack of access or loss of access to the market for Ghana. You can narrow that gap, obviously, by hiking rates domestically, and that's going to help, presumably, keep domestic lending taps open, but there are costs to that as well. So in all of this environment, when the numbers are really going against you, how do you see the role of the central bank in stabilizing the economy?
The role of the central bank in stabilizing has been very clear. I mean, we have a limited set of instruments, trying to manage liquidity and trying to manage interest rates. And that's what we have done in the last year or so. As you said, we have to be conscious of the impact of both the external developments and internal developments on exchange rates. And as if markets get tighter and we see capital beginning to flow out, obviously the interest rate instrument would have to do its part of the work. At home, we are trying to manage liquidity very tightly to ensure that we don't have excess liquidity fueling further inflation and exchange rate depreciation.
The inflation problem, as I said at the beginning, something that governments are grappling with, and many policymakers have not lived through periods of such high inflation in their professional experience. But the noises we're hearing from around the world say that the worst isn't upon us yet. The war in Ukraine is obviously disrupting things like global food supplies. We have a fertilizer shortage looming. So farming costs are obviously increasing. When you look forward the rest of this year, but into next year as well, where do you see that headline inflation rate peaking, or when might it peak? And is there a possibility of things turning back more favorably for Ghana and for the rest of Africa, perhaps, as the next year plays out?
I think that countries have different experiences. If you look at the inflation rates across Africa, they vary from country to country. And you rightly said that Ghana is one of the higher ones. The government and the central bank are very much aware of the problem. We have had very major decisions of fiscal consolidation. Expenditures have been cut by 20% this year. And as I said earlier on, we had raised the policy rate by 250 basis points. We expect that these measures would serve as an anchor to inflation. We had raised the primary reserve requirements for banks, which has also drawn liquidity from the economy. So broadly, all these fiscal and monetary measures that have been put in place should impact on aggregate demand. Yes, a lot of the shocks that we are seeing now tend to be supply side in nature, with food price shocks, oil price shocks, but we think that the West has already gone through the system, and we expect that inflation will be tapering off for the rest of the year.
You talked about cutting of public spending, obviously, and a large reduction there in order to help to tame inflation. What do you feel will be the outcome for overall economic growth? Of course, there needs to be a hit to the overall economy from all of these measures. Is it going to be manageable in the coming year, or are you concerned that growth will fall too far and all of the other impacts that might have?
You know, the Ghanaian situation, in a sense, also reflects what happened in 2020, where the government had a very expansionary stance on policy, and therefore there were many interventions that was put into place in order to protect lives and livelihoods. The impact of that was the real sector being more resilient than we see in other places. And we, as I said, we are beginning to see a pickup in growth in 2021. Some of the data that has come in so far for 2022 does not suggest that we are slowing down. So I believe that if we were to choose between the growth and inflation, the policy priority should be on managing the pace at which prices are increasing.
Absolutely, thank you. I just want to pivot onto the question of currencies. And of course, the war in Ukraine has sparked a renewed debate, if you like, about the role of the dollar, the US dollar as a reserve currency. And there's been suggestions that maybe the era of the dollar's dominance is not going to continue. So is the Bank of Ghana diversifying holdings of reserve currencies? And if so, where and where else are you building up reserves? Is it in the Chinese currency? Is it euros? Where would you be diversifying those holdings?
This topic of reserve diversification became very popular when the US dollar was weaker and was not serving as an effective reserve currency, because most of developing countries and African countries in particular were holding the bulk of their reserves in US dollars. We do not have that situation today. Today, the dollar seems reasonably strong. The issue of what has happened in Russia and the sanctions that were imposed in Russian banks, I don't think presents an argument for reserve diversification for us. Secondly, the issue of the Chinese currency and the type of controls that China has on flows makes it very difficult for us to sort of substitute away from the dollar into the Chinese renminbi. I can say that for Ghana, the central bank has started the gold purchase program, domestic gold purchase program, where we are currently buying gold locally and sort of trying to raise the gold component in the level of our reserves. And this is where the current policy focus is.
Is that connected? I'm interested about the gold purchasing program as well. And as Africa's biggest gold producer, in a high inflationary environment as well, is that playing into your decision about building up gold reserves as a good place to be?
That's a very good question. Fortunately for us, most of the purchases are coming in from central bank profits that we have made over the years, and therefore doesn't really represent an additional push of liquidity into the system. And therefore, I don't see that conflict of fueling inflation further.
Yeah, got it. I just want to ask you a quick question about sovereign ratings agencies, and coming back to this question of sovereign debt and access to the market. The Ghanaian government has been critical about the impacts that the ratings agencies have on the pricing of debt, and the African Union has also echoed that criticism. Is there an alternative to the rating of debt? Should there be an African, a localized rating agency to assess the value and the riskiness of sovereign debt across the continent?
I'm not sure if it's about an African rating agency as to more about the methodology and assumptions that the rating companies use to make their assessment. In the case of Ghana, I think some of the issues that came up had to do with the assumptions that were driving the various forecasts. And then secondly, the timing of the assessment, given that all countries had been hit very badly by COVID, whether really this was the time to go out there for a ratings assessment, which in the view of some, probably not the appropriate time to have done that. And especially if you think of the fact that the whole world was going through a pandemic, and if you were to take out the pandemic from the modeling or account for the pandemic in the modeling, will they have reached the same conclusions that they reached? So I don't think it's so much about setting up an African rating firm. I think it's about methodology and timing and context and all of that.
Thank you. I just got time for one more question. I'm going to pivot to the topic of cryptocurrencies. It's been yet another very turbulent week for cryptocurrencies. And I know that the Bank of Central African States is cracking down on crypto after the adoption of Bitcoin by the Central African Republic, one of its member states. So where does the Bank of Ghana stand on crypto regulation? Again, something central banks are grappling with all around the world. And can you give us an update about how your eCity pilot project is going?
Well, we have come out to let the public know that we do not regulate crypto assets, and therefore, if you engage in any transactions in cryptocurrency, you're on your own. It's not an area where the central bank will be able to provide consumer protection. Now, the ECD, we're making fairly good progress on that. As you know, Ghana already has a culture of mobile money, which has helped a great deal with financial inclusion. So the average person on the street knows how to use their telephone to transfer digital value. And we are taking advantage of that background to develop a retail token-based type of instrument, which we call the central bank digital currency. There has been a pilot in different parts of the country, and the enthusiasm from the feedback that I got has been quite, people have been quite enthusiastic about having the opportunity to be part of the pilot, and gone on their way to reload the CBDC using their own resources to be able to carry out transactions, which is a good sign that by the end of the pilot, we would be able to proceed as planned.
What do you see the benefits for the economy if there's widespread adoption of digital currency?
I think further financial inclusion. We are looking at a system which can operate offline in the most remotest parts of the country. As I said, the populace here are already used to this mode of digital payments using telephones, but we are also looking at a card-based form of instruments that can also be used by those probably in the more urban areas. So yes, more financial inclusion, higher mobilization of savings resources, and hopefully that should help drive economic growth better. Fortunately for us, also we have the country adopted an ID strategy. I'm sure you're aware of the national identification schemes, which in a sense has helped improve identification in our economy, and therefore the issues of KYC and other dangers that can come with these instruments are in a sense minimized.